the housing market is really, really hot right now, not just in Toronto or Vancouver, also here in Calgary. Multiple houses are getting over asking prices. It was just crazy. So I just want to use this time to talk about mortgage insurance. And if you go apply for mortgage, you are more than likely to hear about mortgage insurance already. But is this the right product for you to protect your family? And we will go through it. So please stay to the end and don't walk away. Okay, so mortgage insurance by the name you already know it protects the mortgage. It doesn't protect you. Well, because when something happened to you, say if when you pass away, so the mortgage insurance will cover the mortgage. So it will pay to the lender directly. It will not come through your hand. So this is not as flexible as just regular life insurance, which will pay to your family, and then they can decide if they want to pay off mortgage or they want to use it for something else. So the second thing about mortgage insurance is about underwriting process. So when you go apply for a mortgage, people will ask you, oh, answer these questions. Maybe sometimes it's less than 10 questions, sometimes 5, 6, or 7 questions about your health and have you been diagnosed with anything in the past 5 years, things like that. And a lot of times because the person who's doing lending are not necessarily professional in insurance, and plus the clients, they don't know anything about insurance. They will answer the question in the wrong way. What I heard the most is sometimes they will ask, have you had, like, say, diabetes in the last 5 years? And someone will say, no, I did not, because I get diagnosed 10 years ago. But because of these questions will really affect the underwriting. So the underwriting for the mortgage insurance is usually easy question in the beginning, and then by the time of claim, and then they will do the underwriting. They will go back, say, hey, you didn't say this, this, and this, and in that, because of that, it's denied. So I'm not saying it's just like a tricky in that way. There's so many uncertainties around mortgage insurance, if you will get paid out or not. And you can go Google online. There's many stories about that. So when we get insurance, I think we all want to be insured and ensure that our family is taken care of, right? So that create that kind of, I don't really 100% sure, is not what people want to have when they buy insurance. So that's but like for our regular individual insurance, basically the underwriting is at application time. So they will tell you if you are accepted or not right there. So it's very simple. When the time of claim, and there's only a couple of things needed, and they will not ask you a couple of crazy questions that you cannot answer. So also about mortgage insurance that you have to think about is the portability. Can I bring this mortgage insurance to my next house? So when we start young, we might start with a smaller house, right? With a cheap, it's cheaper, and then when our family grow, we move to another house. So people move around. But when you have the mortgage insurance, will go with the mortgage. So once you decided to buy another house, this mortgage insurance might will have to be canceled and then start a new one with your new house. And so there are many things can happen between now and a new house. So your health condition might change and it might not, but definitely your age will change. You will be older then, right? So all of these things will affect your mortgage insurance premium, because your age and your health is the main thing to see how much coverage and how much premium you're paying, and even if you are qualified or not. So while we're young, when we lock into an individual life insurance, it doesn't really matter if we stay in this house for 5, 10, 20 years, it will not affect our decision or our insurability later. So number 4 about mortgage insurance is its coverage. As we all know, we are paying our mortgage every single month. So hopefully by the end of, let's say, 5 years, our mortgage insurance is, our mortgage amount is getting less and less and less, right? But your premium does not change with less coverage, because remember we talked about earlier, the mortgage insurance only covers the mortgage part. So the mortgage part is shrinking, it's not growing. So with the same premium you're paying, you are paying smaller amount. So that's something, it just sounds not fair. Sometimes if your age grow, and that premium might grow as well. So another uncertainty that we don't want to have when we want to be have insurance, right? And so now the last thing, I'm not done yet, but the last thing about mortgage insurance, I think is the people don't like the most, is even though with all of these disadvantages, it is actually more expensive than just regular insurance. So usually it's 2 to 3 times more expensive than if you buy an individual insurance, a life insurance from a company. And so why would you do that? Why are so many people just buying mortgage insurance then? It's because, first of all, a lot of people don't know the difference. And another reason is that when you are so excited and getting to a new house and getting that loan, and when that slips in, you don't really pay attention. Like your mind is not there, because your mind is focusing on the lending, the mortgage itself, right? You want to be approved so that you can go get the house that you like. So people's mind are not focusing on the insurance part. And when that paper slips in, you just, with a whole bunch of signatures, you just sign them. And that happens a lot, especially when I was in the bank. I see lots of people are, yeah, like that. But our personal finance is our own responsibility. So if you've already signed up for mortgage insurance, don't feel upset or don't feel it's wrong or whatever, because at the end you still have insurance, right? But what you can do at this point is that maybe just go talk to an insurance professional, and they will help you to ask you questions about your insurance needs, because we all know mortgages, not only the insurance needs, we might have credit card debts, we have children to raise, and we might have older parents we want to take care of. There are many things that we want to help them if we are not here. So having an insurance needs analysis before you buy any insurance is a good idea to do, and so that you know that how much like everything that you want to take care of will be taken care of. And so yeah, don't cancel your mortgage insurance right away, because you don't know if you're insurable or not, if anything else comes up. So go find an insurance professional to help you to go through the process, apply, and once you are insured by another insurance company, then you can decide to say, hey, I want to stop this or not. Okay, so that's the right way to do it. If you do need help to assess your insurance needs, feel free to talk to me. And if you have someone around you, you know they are a good insurance specialist, talk to them as well. And we are more than welcome to help you to find a good plan to fit your family needs and also covers the mortgage part. Okay, so if you like content about the personal finance in Canada, and please subscribe and share my video, my YouTube. And if you have any questions, even if it's not related to this, leave in the comment section below. And so that will help me to have more topics to talk about so we can share with more Canadians that we can keep more money in our pockets. Okay, so that's for today. See you next time. Bye.